On the 16th March 2018, the Uganda Revenue Authority wrote to all banks requesting to obtain information the banks have on all their account holders from January 2016 to December 2017. The tax body also requested for the phone contacts of the clients, their email addresses, tax identification numbers and physical addresses. URA further demanded for information on the total cash deposit and withdrawals on the clients' accounts for the period January 2016 to December 2017. The Uganda Bankers Association wrote back on the 22nd March 2018, declining the request, saying the law doesn't mandate URA to make such a request of the banks. However, in an earlier request, URA quoted the Tax Procedure Code Act sections 41 and 42, which they claim give the institution the mandate to freely access without notice any premises, records and data for the purposes of administering any provision of the tax law. Fred Muhumuza, a financial expert, explains the motive behind URA's move.
We also know there are certain transactions in the banking industry that the intelligence authority wants to look at for purposes of suspicious transactions. Now, we have a very large informal economy. Even people who are in the formal sector deal with their banks in a way. Now, it can also have a backlash. It's possible to use the bank information to assess people's incomes that may be outside the formal known processes.
However, Ramadan Gobi believes it was wrong for URA to issue such a letter, which has caused anxiety amongst members of the public. He believes the Bank of Uganda should have been the one to deliver the request.
This is a bad move for URA to think that they can write a letter to banks, which later now has gone public, and ask for information of people pertaining their transactions with the bank. So the best way maybe government should have done it is to engage privately amongst them inter-institutional kind of arrangement, such that they do not really make people anxious.
Muhumuza believes customers are at a risk of losing their information to fraudsters.
Now you're going to bring in a third party who is not as regulated as the central bank does with the banks. Now that's a loophole and a weakness. In our kind of system, it is very risky. We need to know how much people earn for purposes of taxation, but I don't think we have the ability to protect this sensitive data of people, knowing where we have come from. You remember the Eritrean were told was killed because people knew he had brought in money. We remember the banks the other day saying who disclosed the Bajenda's accounts. They were bank staff or they were whichever staff. Now who knows who in URA is now going to put something elsewhere.
The experts believe once the proposal is approved, the banking sector will face a decline because many people will opt for informal ways of keeping their money.
Many Ugandans are not in banks because they feel that banks charge them high costs and they do not see much in terms of the benefits other than maybe keeping money in some safer place. But some people think it's even now safer, now that you are likely to tax my money, it would be safer that I buy a safe and I put it at home or I put it below my bed and so on.
Now, to share this with a third party, I think we need a very strong discussion with the central bank to make sure people's data is safe, because at the end of the day, people will pull out of the banks. And that is even more dangerous than the revenue you want to look for.
However, the Executive Director of the Finance Intelligence Authority, Sydney Asubo, says there shouldn't be any excitement about the issue since it is still a proposal.
Just like all proposals, it has to go through the relevant approval process, all the relevant acceptance process. So as we might already have seen, the Uganda Bankers Association has expressed its opinion on the matter, and that they are waiting for guidance from the regulator, that is the central banks.
Ali Mivule, NTV.